Homebuyers got crushed last year as residential home prices soared toward their highest prices on record. Housing economists across the country saw that the price of home growth, which peaked with year-over-year rates of 20% last year, was just unsustainable. These economists' financial economic models all concurred. On the list of 7 forecast designs going into 2022, every single economic housing growth model predicted housing price growth would slow somewhat in 2022, but boy, were they all wrong. In the last few weeks, that consensus towards the slowdown in the housing market is no longer unified. Now, many more of the so-called real estate industry insiders tend to be throwing their earlier housing market predictions out the window and replacing them with a more bullish short-term outlook for 2022. Undoubtedly, some specialists such as Zillow are now stating that the 2022 springtime housing market may now go down as one of the most competitive housing markets on record. Let's take a look at Zillow's recent predictions. Back in December of 2021, this online expert in the real estate market predicted that U.S. house values would climb 11% in 2022. The expert economists at Zillow today are stating that their past housing market forecast was simply too conservative. The Zillow experts' most recent housing market forecast is giving a new prediction that home buying costs are now set to spike at 16.4% between the months of December 2021 and December 2022. If the new Zillow housing prediction comes to fruition, it might mark another brutal year for house buying consumers in the United States. You're likely wondering exactly why is Zillow raising its 2022 forecast. Lots of it boils down to the ever-growing issues with housing inventory. Through the pandemic, the housing inventory plunged to a 4-decade housing reduction as more first-time homebuyers rushed into the real estate market. That trend was predicted to reverse last year by Zillow and other real estate experts as forbearance protection programs lapsed and home loan rates rose. But none of those predictions have taken place. The housing inventory in the United States has actually gotten worse. In January 2022, there was just under 1 million homes in the U.S. listed on Zillow at 923,000. That number is down a whopping 40.5% from the pre-pandemic number of home listings and down 19.5% from January 2021. Simply put, the housing market is tighter now than it was at this time last year, when bidding wars were at an all-time high and homeowners were having a terrible time getting their offers accepted. That explains why Zillow foresees a harsh month or two ahead for new home shoppers. But there is, however, a very big unknown that is approaching. Once the Federal Reserve changes its policy to greatly help tame the increasing inflation that is happening in the U.S., the Federal Reserve change will indirectly end up increasing new homeowner mortgage rates. In fact, the typical 30-year fixed mortgage price in January 2022 was already spiked to an average of 3.56%. That hike is up from 3.11% from just months ago in December. That marks the biggest one-month leap in home loan rates in more than 9 years. For the short term, more first-time home purchasers may hurry into the home buying process in order to guarantee a lower interest rate before they continue to increase. But in the long run, higher home loan rates should slow down the extreme price growth that we have been experiencing in the country. The reason why? As mortgage prices increase, some first-time home purchasers will be locked out from the marketplace altogether. The Zillow housing experts warn that downside dangers to the housing forecast continue. Elevated inflation heightens the risk of near-term financial policy tightening, which could lead to greater home loan rates and weigh on the housing demands. Higher home prices are exasperating buyers' struggles with affordability. Additionally, this may dissuade some move-up home buyers from entering the home buying market by affecting both buyers and sellers' desire to enter into the housing market. Increasing interest rates could decrease home sales this season with uncertain impacts on prices. Now, home buyers and sellers alike would be smart to simply take Zillow's 16.4% home growth prediction or every other real estate expert forecast model skeptically. No online real estate expert forecast models predicted the historic house price increase we've seen in the last couple of years. Undoubtedly, once the pandemic struck in the spring of 2020, Zillow and other so-called online real estate experts predicted home rates would actually fall by spring of 2021, and that certainly has not happened. Thank you for watching. Don't forget to like and subscribe below. I'll see you on the next video.